Good morning, everybody. I just wanted to provide a little market update. Here we are. We just come off Mother's Day, Memorial Day, graduations. It's pre-summer, which brings us this seasonal kind of mellowing where buyers and many people have a lot of other things to focus on. So with that comes a little bit of a breather in the real estate market. So every year, because of that, people in the paper start wondering, is this the market correction and where are we going from here? So try to shed some light on that. For starters, well, no buyer wants to buy at the top of the market, let's put it that way, and every seller wants to sell at the top of the market. I mean, that's obvious. So where we are though, the facts, the inventory has been hovering between 1,000 and 1,500 almost for the last 4 or 5 years. Market equilibrium in Santa Clara County is more like 5,000 to 6,000 properties. So that's kind of where we have like a balanced market between buyers and sellers. So we're nowhere near any kind of equilibrium or balance in terms of inventory. However, we know the prices have gone up a great deal. I mean, Silicon Valley is not a value market. You're not going to get a bargain in Silicon Valley. Equity markets are all-time high. Money's been really cheap for a long time, so if you're looking for a bargain, you might have to go somewhere else. So in any case, we have seen fewer units transacting during the last month or so this time this year as compared to last, so that's kind of interest. We believe that's a little bit of buyer resistance because prices have gone up so high, so perhaps we're getting a combination of the seasonal other activities going on with some buyer resistance happening at the same time. A couple weeks ago, I listened to an economist from First Republic Bank who did suggest that for this cycle, we've kind of seen the best of it, meaning that prices, asset prices and real estate prices perhaps have kind of like done mostly what they're going to do in this cycle. And he kind of suggested we're kind of going to be maybe just sort of at a level in terms of values for the next year or two. I don't see how it's going to become a flooded inventory market anytime this year because it's very difficult to get from 1,500 to 5,000 listings in 1 year. So I think we'll be a lot smarter in the next month or two as we move further into summer and people begin to focus back on fall and school starting again. But it's a phenomenal market. I think it's a great time for sellers to sell if they're considering selling in the next 1 to 3 years to make sure that you're kind of hitting this mark. And I think for buyers that have a long-term view, one of the interesting factors in the Valley this time around, it's like every up and down cycle historically, people want to talk about how everybody's moving out of the area. And people want to talk about how CEOs are going to say it's too expensive to be here in the Valley. We're going to go to this state or that state. Well, all that's happened in the last 30 years is a greater concentration of corporations and technology in the Valley. Furthermore, in San Jose, with the Google announcement and what's going to be going on down there on 250 acres is going to completely transform San Jose and Silicon Valley once again in the next 10, 15, 20 years. So I think what people are seeing is, yeah, there might be some correction here at some point. There kind of has to be because there always is. That longer term, people are looking beyond that and saying, hey, I'm willing to pay that price because this is one of the most beautiful areas on the planet. We have the beach, we have the mountains, we have snow, we have great schools, we have a great economy, we have technology, and so therefore people are willing to kind of pay that price and sort of bank on that longer term future. So hope that sheds some light on where we're at today, 1st of June, 2018.